So I'm going to share my screen. Okay, so the first question I will do it together with you is on page 807, question E 14-3. Okay, so make sure you find your textbook, and once you are ready, please let me know. Okay, once you are ready, please let me know. On page 807 and question 14-3. Did you all find it? Thank you, Meryl. Thank you, Kana and Riley. Thank you, Joshua. Nick?
Yes.
Okay, thank you, Rudis. Okay, so seems like everyone has found the question. So this question is about the income statement for this company is shown below, okay? So they have an income statement, sales, cost goods sold. The difference of these two is your gross profit. And then you have operating expenses. And the difference between these two is your income from operation and interest expense. And the difference between these two is the income before income tax. And then you have income tax, and then the net income, okay? And we know the 3 years numbers, 2018, 2017, and 2016, okay? So I'm just going to quickly enter all these numbers. You can follow along. Make sure I'm entering all the numbers correctly. Okay, am I correct? Did I enter everything correctly?
Everything is correct.
Okay, thank you. So that's the information we have, okay? And the first question is asking about using horizontal analysis, calculate the horizontal percentage of a base year amount. So assuming this 2016, this is the base amount. For this year, that's the base amount, okay? And calculate the horizontal percentage of a base year amount, assuming this is a base year, okay? So then what I can do is percentage increase, right? Percentage increase. So percentage increase in, okay, so for 2017, okay. So I will use the change, okay, the change. 17, this is the sales, 1,400, minus the base year amount, 1,200. Okay, that's the difference, that's the change, divided by the base, 1,200. Why I use 1,200? Because this is the year we are using the base amount. So the increase of sales, okay, in 2017 compared to the base year 2016 is 16.67%. Okay. Then I can know everything, right? So cost of goods sold, that increase is 25%. Gross profit, 8.33. Operating expenses, 2.5. Income from operation, 20%. Interest expense increased by 25%. Income before income tax increased by 18.75%. Income tax increased by 20%. Net income increased by 18.33%. Okay? So then the same idea, I want to check 2018. So I just need to use the 2018's number to calculate the difference. Sales minus base year, okay, divided by base year. Okay, 33.33%. Okay, and cost goods sold here, income is a negative 10%. Why? Because income from operation for 2016 was 200, but it's only 180. So that's a decrease. So that's why it's negative 10%. Okay. Do we have any questions on this horizontal? Means the same company you can compare it over years. This horizontal analysis. Does anyone have any question on this? Thank you. Okay, good. So this one tells me the change, right? In terms of percentage, compare to the base year. Okay, so number B, using vertical analysis. Okay, vertical analysis for a year. Okay, so what is a vertical analysis? So for 2018, so I'm just going to copy these numbers, okay? Okay, so what I'm going to do for vertical analysis is the sales, this is the largest number, right? You can see sales is the largest number. I'm going to use the sales as a base, okay? So I use this number divided by the base, which is the sales. Okay, so that's 100%, right? That's 100%. And then I want to see the other components. So cost of goods sold is 56.25% of the sales. So my gross margin is 43.75%. Operating expenses, for every $1 we made in sales, you pay 32.5 cents, right? 33 cents on the operating expenses. And then the bottom line is, for every $100 you made in sales, you make $4.7. That's your net income. So that's for the year of 2018. Okay, I will do the same thing for 2019. Okay. Okay, so you can see that the gross margin has is different, right? A little bit different. Relatively stable, but a little bit different. And then for 2016, okay, so for 2016, that's the number, okay? So you can see that each item, each amount, okay, is divided by the base amount, which is the sales. You want to see what's the percentage of the number as of the sales, okay? So in 2016, okay, for every $100 sales you made, you make $10 net income, okay? Are we okay with this? Do you guys have any question? So this one is called horizontal analysis. You can see that I'm comparing across the columns, right? From the left to right, right? This one is called a vertical expenses, right? Vertical expenses. As you can see, I'm going this vertically, right? I'm comparing from different rows, right? So that's why this one is called vertical analysis. This one is called horizontal analysis. Does this make sense? Thank you. Yeah. Okay. And the last one is identify any significant change from 2016 to 2018. Explain the trends in your analysis that the management should be concerned about and the trends the management would be pleased to see. Okay. So let's take a look at it here. Okay. So when you use this horizontal analysis, what can you learn? Okay, so then you can think about, well, when I compare 2017 with 2016, well, the sales has increased. That's a good thing, right? You have more sales. Okay. The cost of goods sold increased 25%. Sales only increased by 16.67%. Okay. So that's kind of interesting because so you increase 16% sales at the cost of goods sold is 25%, right? Okay. And then your gross profit increased number-wise by 8.3%. Okay. And your net income increased 18.33%. So these numbers are all positive, right? All positive. You are mostly concerned on the bottom line, right? The net income. Okay. So it's positive. You make more money. So that's good, right? That's good. However, when you compare 2018, well, you see quite a few negative percentage, right? That's a bad thing, right? So for 2018, you realize that actually your net income is down, right? Your net income is down. Even though you made a lot of more sales, right? Look at this. In 2018, you make $400 more sales here, but you are not making more money, okay? So what happened? Okay, so basically the cost of goods sold increased by 300, right? So you even though have $100 more gross profit, 700 compared to 600, but your operating expenses increased by 120, and your interest expenses doubled. Your interest expenses was 40, in 2018 it's 80. That means you must have borrowed more money, right? You probably have more liabilities. Okay, you can see that the increase in sales only translates into a $100 higher gross profit, yet the operating expenses is $120 higher, and also the interest expenses is doubled, right? So that's why you ended up with less money, the net income. So that's what you can learn from the horizontal analysis. For vertical analysis, you want to pay attention to this number, right? This number. This is the gross margin, right? So use the gross profit divided by sales. This number is your gross margin. The higher the better, right? The higher the better. But in this case, you can see that the gross margin has been declining, right? So 50, 46, 43. So that's a bad thing. So what happened? How come the cost portion is getting increased? Is it because the market competition, right? There are more competitors in the market, so there's great pressure on the selling price, right? So if there's a lot of competitions in the market, then the pressure is to lower your selling price, right? If you lower your selling price, you would have less. Your gross profit margin would be down, right? Okay, so that's an unfavorable trend, right? When you compare. And net income. So this is your net income. So you can see that 10%, relatively around 10%, but in 2018 it's only 4.5%, right? Is there anything else you guys can see from this analysis? So the interest expense, right? Okay, so it was 3.3% of sales, and now it's 5% of the sales, right? So you can see that the interest expenses has been hiking up, right? So you borrowed more money, okay? So that's something eating up your income, right? What else you can see? Okay, so that's for this question. Do you guys have any questions about this exercise?
Can we go back over horizontal again?
Yes.
Just like which one goes to?
So if you want to calculate the increase, you are talking about you compare to 2016 because 2016 is the base year, right? So for this case, I'm just going to use my 2017's number, okay? And I'm going to calculate the difference from the 2016, which is the base amount. And I'm going to divide that using the base amount. Okay, so I use 1400 minus 1200. That's the change, right? And then divided by the base amount. That's the 2016 number. So I got 16.67% increase. So my 2017 sales representing a 16.67% increase in compared to 2016.
Okay, that makes a lot of sense.
Does that make sense?
Thank you.
Yeah, okay. So anyone else have any other questions? It makes sense, right? This is called horizontal. When you compare this way, horizontally across the column. And this one is you are comparing across the rows within each year, right? So you compare vertically, right? So this is called vertical analysis. Okay, does this make sense?
Yeah.
Good. Okay, so that's this question. Okay, so now I'm going to talk about the other one. The other one is the, today is last lecture. Just give me 1 second. Last lecture. Okay, and then I'm going to talk about the other question. Did anyone get a chance to read that question? If not, please read it now. Made up question.
Yes. Yeah.
Solution. Okay. So this is the question. Okay, I attached this document to the email I sent you this morning. Are you able to find that question? Okay, now it's good. I have everything set up here. Okay, so I'm going to do this together with you guys. Okay, so this is on page. This will be made up company. Okay, so we have this trial balance. The year end is December 31st, 2016. Okay. And we have additional information about the assets, right? Opening AR, opening inventory, opening cash, prepaid insurance, accounts payable, salary payable, okay? And during the year, the company have the following transactions: issued shares of cash for cash of 2,000, paid off long-term debt of 100,000, purchased the equipment for 86,000 cash, sold the equipment with net book value of 3,000. Okay. So let's prepare the fourth statement. This is quite comprehensive today. Okay. I'm going to work with you to prepare the four financial statement. Which is the first one we should prepare?
Income statement.
Income statement. Thank you.
1 point.
For the year ended December, right? So I first need to have these titles, right? I'm going to make it look nicer here. Okay, so I have this title, right? Okay, so first I need to know the sales. And the sales, that number is here, okay? 462,550. Okay, so I just want to make this to be accounting. That looks better, okay? And then what are we gonna do? Sales, and then what's the next? Anyone?
Salaries expense.
Cost of sales, right? So you have to first calculate the gross profit, right? This company has a cost of goods sold, right? Cost of goods sold. So you have to calculate the cost good sold. And so this one is how much? That would be 179. Okay, so now my gross profit will be the difference. Okay. Okay, it's kind of crazy now. I just have to. Okay, so the gross profit is this, right? Now I need to figure it out what's your operating expenses. Okay, so let's go from the top to the bottom. So I have a salary expense.
Salary expense.
Yeah. Salary expense. That number is 682. Okay, and next, salary. Sorry?
After depreciation expense.
Yeah, depreciation, very good. So this number is here, 825. And depreciation, insurance. Insurance expenses, 9,500. Okay. Turning sales dividend. Rent expenses. Rent expense. So that one is 11,450. Right here, 11,450.
Yeah.
So the total, so I'm going to sum this up. The total okay. So what is my income? Is there anything else? No, it's just the net income. My net income so is this minus this. Okay, are we good with this? With the income
Yes.
statement?
Yes.
Okay, very good. Thank you. Okay, so that's this first one. So let's take a look at the other one. So the other statement. So that would be the second one, right? Second one is what it's called what? Statement of, what's the name of the second one?
Equity.
In equity? Yeah, okay, good. So now here I should have, okay, I should have a beginning balance. Beginning balance. And I have shares. And I have returned earnings. Right, I have a total. So what's the beginning balance of the shares? So beginning balance of the shares, common shares here. Okay. So we have common shares, 19, right? 19,000 here. Okay. Return earnings here, 12.
12,030,50.
Yeah, very good. 12. And the total would be this plus this. Okay, and so during the year, I'm going to add issue the new share, issue new shares. How much? So you issue the shares for cash of 2,000. So there'll be $2,000 increase. Okay. And you have net income, right? You're gonna add net income. So that number is this. And you're gonna less dividend. So how much dividend issued? Dividend here is 40,000 in the trial balance here, right? So minus 40,000. That's it, right? That's it. So here, the total ending balance, that's gonna be okay. Okay, does this make sense for the second statement? Thank you, Rudis.
You're welcome.
Okay, so that's the second statement, okay? Thank you. Yeah. So that's the second statement. So the third.
A statement of financial position.
Yes, very good. Statement of financial position. And this one is for on a date, right? December 30th. Oh, I don't like that. That's not what I want. I just want this to be written out. Okay, like that. So now I need to prepare that statement. So I need to have different sections, right? I have an asset. I have a current asset. So this one will be cash. Cash, inventory. Sorry, no, cash.
Account receivable.
Accounts receivable, yeah, very good. Accounts receivable. And then you have inventory.
Inventory.
Yeah. Prepaid. Prepaid insurance. Okay. So here.
Equipment.
Okay, so that's then, okay, very good. So I'm going to have a total here. Current, so I have a total. Okay, so for this one, accounts receivable, and then I also have allowance for uncollectible accounts. Okay, accounts receivable. Yeah, okay. So here would be less. Okay, so let's see the cash is 35,300. AR, accounts receivable, 20,000. And then you remember here, you have this allowance for doubtful account, right? Here, allowance for uncollectible. So this one is negative 3,500. Here, that's this one. Inventory, 61,500. Prepaid expense, 2,300. So my total current asset, this is my total current asset, is this, right? Current asset. So now let's take a look at a non-current, right? Non-current asset. I have equipment, right? Equipment.
Yes. Yes.
Okay, so that is 1,330,000. Okay, I'm gonna represent it like this. So you want to separate it like this, so you can see that this two account is connected, right? So let's do this. So for AR and allowance for doubtful account, you set them up onto the left column and only reporting this net, right? That's your net accounts receivable. And this one, like this. So equipment, and now you also have a
Depreciation.
Very good. Less cumulated depreciation equipment, right? So this one is a negative 21,000. Okay, so now let's take a look here. Oops. Come, not. So now this net carrying value will be these two. Okay. Okay, so that's it, right? So my total non-current asset. So that's gonna be this number, just this number, right? Now my total asset, right? Total asset will be current plus non-current. Okay, current plus non-current. So that's my asset. Okay, that's my asset. Here, I'm going to do my liabilities and equity. Okay, so what happened here? I don't know what happened. So let's do liabilities and equity. Okay, let's first go with
Account payable.
accounts payable. Let's first do current liability. And you are absolutely right. We have account payable. So this one is 27,000. Okay. And then what else?
After the
Salaries payable.
salary payable,
Okay, salary payable. Where is it? Here, salary payable. So that's 3,600. That's it, right? For the current. Total current liability. So that will be this. Yes. Do we have long-term liability? We don't, huh? We don't have long-term liability, right? I didn't see any.
no more.
No, okay. So now it's the equity of shares.
Common share.
Earning, yes, common shares. And this number, I can get it from the last one, right? So common shares, that's this number. The return earnings is this number. Okay, so total, okay, these two together. Okay, so then what's my total liability and equity? That will be this number plus this number. Okay, so we are in trouble now. These two are not balanced. This one and this one is not balanced, right? Do you know why?
No.
Because ideally, once you done this, these two number has to be the same, right?
Yeah. Balance.
Okay, so this is why. Okay, think about this gain, loss on sale of asset, right? Did we report this one?
Nope.
We didn't, right? Did we?
Oh.
Okay, so then we need to have that, right? So the income from operation. So the income from operation is this, but you also have a loss, right? You have a loss on sale of asset. So that's 2,000. So now I have my net income equals this plus this one. Okay, so is that net income? No, that's the net income. Okay. Okay, so we are closer now. See? 227, 600, 229, 625. Okay, so what's the difference? This minus this. So 2025. 2025. So where did I miss that 2025? 40, 50, 40, 50. Okay. So the purchase of the equipment. Pay off the long-term debt. Sold the equipment. Book value. We can figure out this for the cash implications. So where did I miss? Okay. Okay. The good thing is I think I have a solution. Too bad if in the exam you don't have a solution. Okay, let's see where I did it wrong.
Yeah, where can I get those? That'd be.
So here, the net income is 205, 650. Mine is 275. So this one is wrong. Where did I write it wrong? Oh, here it's 7825. It should be 7850. Yeah, 7. Did you see? It's a 7850.
Yeah.
I write it as 7855.
Yeah.
So now my net income is right. Okay. Okay. So just a lot of times we just be really extremely careful, right, with what we are doing. Oops, here. And then this guy, okay, where I did wrong. So here, the opening balance is 2,000. Okay, yeah, that makes sense. So the opening balance is 1,700. So this issued share at the year end is the 19,000, right? So that's the ending balance. So this number should be 19,000, right? Because this is December 31st, 2016. The common shares, this is the ending number. So I know during the year I issued 2,000. So my opening would be this minus this. So my opening is actually 17,000. And then during the year you issued 2,000. You have an ending balance of 19,000. Okay. Whew. Now it's balanced. Take a look. Now it's beautifully balanced. And the number is 227, 600. Okay. So are we okay with this? The first three statements. Is there any question? Are we okay?
Mine's still not balanced, but I'm just checking to make sure I've got everything.
Okay. Well, you have got a 227, 600. Yeah, this 19,000 is actually the ending balance, right? Because that's the December 31st. Well, the opening, how do I do the opening? Well, they only issue the shares for cash for 2,000. right? So the opening is 17 plus the new issuance 2,000 together is 19,000, right? So I think I entered the wrong number here in the first place. So if you don't have balance sheet balance, it's not a big deal, right? Like something like what I did, right? So you don't have a balanced, but you did everything correctly, right? It's just like sometimes you enter the wrong number, right? Maybe you only have one spot, you enter the wrong number. But everything else you did right, you still get the points, right? Okay, so are we okay with this statement?
Good now.
Okay, good. So now I'm going to do the last statement, right?
Cash flow.
Pardon me?
Cash flow.
Cash flow, yes. Statement of cash flows. This one is for the year ended. So I'm going to first do my operating activity. Well, I start from net income.
Mhm.
My net income is, this is my net income. Okay, I have a loss. I reported a loss. This one is about the sales of asset. Like I said, when you're talking about the sales of long-term asset, it's really under the investing activities. So we need to add this loss back, right? That's to know the operating activities. So you add loss on sale of asset. So that number is 2,000. Okay. Okay, so and also I need to add what? This is loss. I need to add back another expense. Do you remember what is that? A non-cash.
Cash.
No cash, a non-cash item.
Yeah.
What is that? I need to add back one expenses. Depreciation expense. I need to add that back, right? Because the cash was your initial payment on the long-term asset. There's no cash involved over the time. It's just recognizing the expenses. That's the depreciation expenses. Okay, so then I need to deal with adjustment on the working capitals, right? So adjustment on working capital, the current asset, the current liability. So what I have cash, AR. How does AR change? Okay, so AR right now, what's my AR? That's the number, 16,500, right? That's the ending balance. What's the opening? The opening is 1,800. Can you follow my cursor? Are you able to see my cursor?
Yeah.
Yes. You see this 1,800?
Yeah.
That's my opening AR net, right? So that's a decrease from 18,000 to 16,500. That's a decrease of 15,000. Okay, so you have a decrease in AR by 1,500. So should I add or subtract? AR decreased. If your AR decreased, that means you are collecting cash, right? You are collecting from customers. That's why AR decreased, right? So do you have more cash or you have less cash?
More cash.
Yeah, so I'm going to add 1,500. Okay, that's the rationale. Okay, so now let's take a look at the next item is inventory. So is that, yeah, next item is inventory. Closing balance is 61,500. Opening is 55,600.
Didn't we have an
Inventory-
increase in accounts receivables though?
Pardon me?
Didn't we have an increase in accounts receivables?
The
Went from
opening
18
of
to
the
20?
accounts receivable is 18,000.
Yeah.
The ending is 16,500.
Oh, okay, I had that wrong.
Okay, so then we also have here is an increase in inventory by how much? So this number would be the ending balance inventory minus the opening, which is 55,600. So there's an increase of inventory by 5,900. Okay, so your inventory increase means you are buying more inventory. Does that use your cash or you are collecting cash?
Use cash.
So added or subtract?
Subtract.
Very good. Yeah. So what's the next? Prepaid insurance. Prepaid insurance opening balance is 2,000. Ending balance is 2,300. Okay, so I have a increase in prepaid by 300, right? So how you increase your prepaid means you are paying it now, right? Prepaid means you paid now in cash, right?
Yeah.
So if your prepaid increase by 300, are you collecting cash or you are using cash?
Collecting cash.
Collecting cash?
No,
Prepaid,
using cash.
yeah, prepaid insurance means I'm paying for next year's insurance now in cash, right? So if your prepaid account increase, that means you are prepaid more. So you are using your cash to prepay.
Yeah.
You are minusing 300. So remember, when current asset increase, that's always consume your cash. Okay? So inventory increase, prepaid increase, is always consume your cash. Okay?
Okay.
That's all for the current asset. Current liability. So your opening current liability of accounts payable, 22,500. Ending is this. So you will have an increase in AP by ending is this number minus opening 22,500. So by 4,500. So your liability increased 4,500. Okay, are you saving money or you are using money?
Using money.
Using money. If you use money, you should not have liability, right?
Yeah, no, it's true.
Only when you save your money, right? You have liability. So if you buy something, you can either pay cash or you can either make it as a AP, right? Accounts payable, right? If you have more accounts payable, that means you are saving the cash on your pocket instead of paying it out. Okay, so increase in liability is going to save you cash. Okay, does that make sense?
Yes.
If you don't increase liability, you have to pay cash, right? Suppose you have to buy something, right? It's $300, right? If you don't use your cash, you can say credit AP, right? For 300. So your AP increased by 300. So that means otherwise you would pay cash 300, and because you use your AP, you save the cash, right?
Now I understand.
Yeah.
Thank you.
So if you increase in liability, you are saving the cash on your hand. Okay. So salary payable from 2,000 to what's my here to 3,600. So that's an increase of 1,600. So increase in salary payable by 1,600. Do you add or you subtract? Increase in liability. Do you add or subtract? Just like your increase in AP, right? Just like your increase in AP. If you owe more money to your employees, owe their salary, that's your salary payable. If you owe more money to your employees, that means you save the money on your side, right? You're not paying them, right? So that's a 1,600 plus. Does this make sense? Yes or no?
No.
No? So the idea is when you increase in liability,
Yes.
you are saving the cash.
Yes.
Yeah. So it can be accounts payable or salary payable. If you increase that liability, you are saving your cash.
That's right.
Yeah. That's why these two numbers are positive. Okay. Anybody have any question? So cash generated from operating activity. That's the 216,900. Okay, investing activity. What is the investing activity? It's about long-term asset, right? So in this case, you purchase the equipment for 86,000. Purchase equipment for 86, right? Do you use money or you collect money? Use cash or collect cash?
We used cash.
Use cash, so minus 86,000. Okay, and you sold the equipment. You sold the equipment with net book value of 3,000. How much cash did you collect from the sales of the equipment? How much cash did you collect? Well, the net book value is 3,000. Do you have a gain or loss on this sales of equipment? Do you have a gain or you have a loss? You don't know? Do you know or not?
No, I don't.
Yes, you know. You have a loss, right? The loss on sales of asset is 2,000.
Oh.
You see that? So if the value, the net book value is 3,000, how much do you think that person pay you will make you have a loss of 2,000?
$132, or what is it? Hold on.
So on your book, you think the value of the equipment is 3,000. How much do you think that that person pay you to make you have a loss of 2,000?
$1,000.
1,000, right? So then you know you sold this equipment for $1,000, right? And that should be a positive, right? 1,000. Okay, so here I have this plus this. So the cash used in the investing activity. That's the 85,000. Okay. And now financing activity. We issue the shares, right? We issue the shares, share issuance for 2,000. Do you receive cash or you use cash? 2,000. So you issue the shares for cash of 2,000. You give the shares to the investor, right? And what did you get back from the shares?
However much times how much you sold it for.
Yeah, so 2,000, right? Here's 2,000. So do you receive the cash or you use the cash?
You got cash.
You got cash, so you add 2,000. Okay. And also long-term debt, paid off long-term debt. Do you use money or you receive money if you pay off debt?
You're using money.
Using money, yeah. You have to give that money to the bank to pay off your debt. So minus 100,000. That's it. That's it. Everyone, that's everything. So together. So cash used in financing activities is 98,000. Okay, so total, if I add the three together, 1, 2, 3. So in total, cash increase, right? Cash increased by 33,900. What's my opening balance? Opening balance of cash. So the opening balance cash is this number, 41,400. 41,400. What's my closing balance? So I'm gonna add those two together. So your opening is 41,400 and the cash increased by 33,900. So my ending should be 75,300, right? But here my cash is 35,300. So there is a $400, $40,000 difference. So where did I do wrong for that $40,000 difference? The dividend, right? The dividend. Did you see the dividend? So here you have to add another line. Pay the dividend, right? Pay the dividend. That'll be minus 40,000. So now my closing balance is 35,300, which is correct, 35,300. See, that's my statement of cash flow. Just want to double check. Oops. Just give me 1 second. Okay. Yeah, see? 216,900, 85,000, 138,000. Yeah. Okay, so are we okay with this? Do we have any question? Okay, if you don't have questions, we are 4 minutes from the class finished. I'm going to post this Excel sheet, okay? I'm going to also post the video, okay? So this is our last lecture. It's my great pleasure to work on this course with you guys. this is not the ideal situation. I think we would have a lot more fun if we can have the face-to-face, type of setup. But it is what it is, right? Oh, thank you. Thank you, Tyler.
Sure.
Yeah, so maybe we'll run into each other in the future, right? I'm in the accounting profession, right? I'm teaching at the UFL. So maybe you would take my future courses, right? Anyway, I just wish you guys all the best in the semester. Hopefully you all study hard and do very well in the final exam. Thank you, appreciate it. Yeah.
Yeah, thank you.
Yeah, I mean, it's really, to me, it's really awesome, to every semester, one after another, I get to know more students, right? And hopefully I can have some positive influence in your life. And please keep in touch in the future if you need anything, need any help, need to seek any advice, whatever. So yeah, so like I said, this is not ideal type of teaching. Like I think it will be much better if we could just go back to the regular type of lecture, right? So yeah, hope you guys all do the very best in the final exam, and stay safe, right? Try not to get infected, even though it may not be a big deal. But I heard there are some kind of side effects, right? If you have got this disease. So you never know. I guess we know too little about this virus, right? So let's just still try our best to stay away from it. So let me know if you guys have any questions, even though the class is over, but I'm still open to you guys. If you have any questions, please send me an email, or you want to schedule with a video meeting with me. That's all good, right? The point is I'm here to help you. So make sure, let me know if you need any help. It's not easy, right? It's lots of things. Take a look at this question, right? And sometimes I forgot about things, right? And the good thing is sometimes you check how much you are off, right? So in my case, I was $40,000 off, and right away I remember there's this $40,000 dividend, right? So that's one way for you to check it on it. Okay, so yeah, all the best in your exam 3, and all the best with your future endeavors, right? I wish you guys to get a co-op, get good jobs, right, and start a good career. Okay, it's my greatest pleasure to meet you guys. Okay, so please forgive me for whatever the lack of the interaction due to the online delivery. Okay, so all the best, everyone. Thank you.
Thank you very much.
Thank you so much. Bye.
Thank you.
Thank
Take care,
you.
guys. Yeah.
Thank you.
Yeah.
Take
Bye.
care.